So after fall of 3-4 days yesterday, US markets recovered, and no particular reason. I think some bargain hunting must have emerged. Uh, the focus is on CPI data today, and it is expected to be slightly lower than last month, but still in the higher range only. So it will be a factor that Fed will consider when they meet on 21st of this month. A lot of talk about the tax proposals of Biden government, and I think it's getting slightly diluted, probably be less than what was originally proposed, but still it is expected to meet a large part of the 3.5 trillion spending bill which Biden has put forward. So that way it is a good thing. But as and when it comes, people are keeping their fingers crossed how much it will pass through, and then only assess the impact on the stock market. Right now, consider looking at the stock market reaction, people are not so much concerned. Yeah, and I think on the global markets, we have oil, which is slightly going up because of the disruption in supplies from the southern part of US, uh, Texas, and other places. So due to the storm they had, uh, it's a crucial resistance at 71. That is WTI. So if it breaks, then we'll see much larger movement. Dollar has been hovering in ranges. I think waiting for direction from the Fed or more data. Today's CPI. We'll have a lot of data from UK also. We have UK unemployment data, and later on UK CPI and UK CPI and retail sales also later this week. So those are things to watch out. Canada election is there on 20th. That's another thing which is on the radar of the people. Yeah, that's about the global markets. I think still dollar is rangy between 92 and 92.80. On the domestic side, yesterday we saw we had data shows that both the DIS and FIs were sellers in the stocks. That's why initially it fell more than 0.5%, but recovered once again. The trend is still up, so bargain hunting would have come up. CPI came lower. It was a surprise, 5.3 versus 5.59. 5.6 was expected. Good thing was even the core was lower. The broad-based fall, particularly led by food prices, I think. So this will this is one way it will also improve because Kharif crop has been good. So that's the view. And also in the coming month, there will be a favorable base effect, which will keep the CPI lower. So overall, it means that the policy dilemma for RBI is that much lower. They can still focus on getting growth back to the pre-COVID level. That's the conclusion. When RBI will change their stance or indicate liquidity withdrawal, more liquidity withdrawal is not nearby. That is what I would say. We'll have WPI data also today. Yes, that's it. And overall sense on the Indian economy is overall we're getting only positive vibes. So these flows continue, and only a strong negative trigger from the global markets should push both stocks and the currency down. As of now, both are quite stable, and I would say on the stronger side. Rupee range for the day should be between 50 and 75. Yeah, thank you.
Good morning, everyone. So overall, the main data input which was there yesterday over the CPI inflation in India, and that was 530. Where broad market was expecting between 560 to 580. That's a good pleasant surprise. But the most of the lower inflation came because of our primary articles, and that's not very in a way not encouraging. Yeah, headline numbers are coming down, but core inflation is still staying elevated. overall the inflation trajectory which RBI has projected and the real inflation which is coming, CPI inflation which is coming, is on a lower side. So maybe in October policy, RBI might reduce the inflation path, trajectory path, but still their overall objective would be to achieve 4% and inflation staying higher than 5. There is a post, I think either December or somewhere, they will start putting up a path which will actually would be put into a way that to bring inflation down to 4%. So that's on inflation. I think the main trigger of inflation or any action by RBI will be more driven by what global central bankers, in particular FOMC, does. Uh, Today is a WPI, that's okay, but I think today today's CPI in US would be a very, very crucial. If some way, some form, if it expectations around 5.3%, but if it print below 5%, that could real surprise in the market that inflation is not as red hot as market is expecting. So that's the trigger market would be looking at. Overall, Indian yields were higher 2-3 basis yesterday, primarily driven by again the increase in borrowing expectations. So these are the few things which drove the market yesterday. Dollar rupee, particularly, we saw somewhere some selling above 73.70, but RBI was consistently, or maybe a major central banker, or maybe our central banker was. Major foreign bankers and our central bank yesterday was buying at 73, 58, 59, those levels. So I think 50, 65, 50, 70, that should be the range for today. Yeah, I'm done.